analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. Sorry, we had the technical analysis screen up for a moment there, but we've got things corrected. As we get started, as always, keep in mind that there's risk involved with each trade that you take. So you want to make sure that you protect yourself on the risk side as you go after those profits. And we'll go over some ideas in that regard with some of the tools that are built into the order window within our app and web trader that help the risk management side of things quite a bit. It makes it quite a bit simpler to do the calculations. And also keep in mind that what we cover is not meant to be financial advisement, but is coming from an educational perspective. Now, from our main website, we can log into our web trader platform, which allows you to trade on both MT4 and MT5 accounts from the same location. And our app works the same way with the same tools that we'll be using. So as we log in from the website, we'll find ourselves in the web trader platform. There's some fundamental news stories that have been kind of ongoing, and then there's news that we can look at that would be new information that's coming out today. And so we'll take both avenues to come up with some ideas about some fundamentally driven trade ideas. And then we'll look at the technicals a little bit as well regarding entry point, exit point, where it makes sense. So now leading up to today, there's some big stories. One would be U.S. interest rate situation. It's really dominated the news in the U.S. and even the global market movements as the U.S. has started to initiate rate cuts. Jerome Powell, after about a year of resisting the encouragement to do so from the Trump administration, if we want to call it encouragement, the FOMC committee and Jerome Powell in their last meeting finally did a rate cut. It was only 0.25%, but that's what it was expected to be, although some thought it should have been larger and sooner in that regard. But the point is, those rate cuts tend to buoy the market. They tend to be a net positive for the equities and the major indices because in general, the stock market views lower interest rates as good for business. You can take business loans, you can expand cheaper. Your clients, your customers can use credit cheaper to buy things. So there's an effect on both sides, from the producer side and the consumer side. When interest rates at the federal level are lowered, it's a net positive for business in general. Now, the reason the interest rates were so high for so long was to bring down inflation. All the easy money that was handed out during the COVID pandemic years, sure, it was needed maybe to keep the economy afloat, but it put a lot of cash out there in the system with the stimulus packages that were handed out. And not just in the U.S., this was happening globally in different countries, but the U.S., I think, maximized it the most with I don't know how many hundreds of billions of dollars handed out. But in the end, the U.S. was left with very high inflation, like other areas around the globe, but have been the slowest now after inflation came down, have been the slowest to lower interest rates back down. They raised them up to bring the inflation down, and now are starting the decline of those interest rates in the U.S. A bit slower than maybe the Euro area, the UK, Australia, etc. But they've finally gotten to that point. Now, moving forward, the anticipation is, especially each time we see weaker than expected data out of the US, whether it's production data, inflationary PPI or CPI data on the economic calendar, any bit of economic information coming out that comes worse than expected, the markets have been cheering that. Why would the markets go up with worse than expected data? Because then they expect, hey, rate cuts will come larger and quicker. And so, because Jerome Powell kept saying, and Jerome Powell's the main decision maker there in the U.S. that decides whether to lower the interest rate or not. he's been saying it's data dependent, it's data dependent. And so each time the data shows a larger than expected slowdown, the markets kind of surge up a bit. It's not a 100% one-to-one connection, but that's been the trend. And so more recently, there's been more weaker than expected data out of the US in the past week or two since the last rate cut. So the expectations have been raised even more with the government shutdown now causing some issues in the US. If you're not paying attention, the US government, they're arguing in the Senate right now about trying to pass a budget resolution and to continue to fund the government and all of the expenses that it incurs. And right now they haven't agreed on anything. And it's pretty typical each year that the US goes through these gyrations and it comes down to the last minute. But usually within a few days, if it runs past the deadline, a budget is passed. In this case, it's been over a week and headed towards 2 weeks maybe. And so that's created some, I'd say, nervousness on the markets a bit. But I think the former topic, the rate cuts expectation being higher than expected now, is more of a net positive than the government shutdown worries being a negative. Because in the end, these things each year have been worked out in the past, and the government isn't going to stay shut down forever. So you probably can expect a positive surge when the unexpected announcement comes that, hey, they've reached a deal in the US on opening the government back up fully. So I think that's probably flat to a net positive once a deal is reached in terms of the government shutdown in the US. It's been one of the big driving stories that caused a bit of a pullback for a few days in the US markets especially, that I think has kind of worn itself thin. And then at the same time, increased expectation of rate cuts is a net positive. And so we saw yesterday, again, US 500, even in the European markets, German 40, etc., reaching all-time highs again, okay? And now we have today Jerome Powell speaking on the economic calendar. So if we want to take a look at the economic calendar, we can take a look at specific bits of fundamental news, exactly when are they coming, to kind of build on this backdrop of kind of positive momentum regarding expected rate cuts coming. So if we look at today on the economic calendar, what we can see is Fed Chair Powell, this is the gentleman I was just speaking of, who finally started cutting rates the last FOMC meeting. He speaks today. Many times he builds on what he's already said. And what he said basically was he thought it was time to cut rates because the job situation got so bad in the US, the hiring data and the layoff data became a bigger risk than causing more inflation with rate cuts. So if he comes out and says more of the same, and he might, because there have been more bad data points that have come out, then you might see the markets react positively to that. Now, obviously, he could come out and say the opposite. I don't think the data is there for him to have changed his mind, though. But if he came out and said, we're afraid of any future rate cuts, we might slow down, then you might see the markets pulled down with that type of talk. And it's always risky to try and anticipate what someone will say before they say it. But in this case, it seems to be built in to what he's been saying for months, is everything's data dependent, and the data has been kind of weak out of the US. So he may talk more about that, and if so, you might see a further weakening potentially of the USD if there are increased expectations of rate cuts. You could see gold climbing against the USD in response to that. We've seen gold break 4,000 and 4,050, hitting all-time high after all-time high this week. Why? Largely because of expected rate cuts on the US, which could cause inflation to come back. Inflation means a devaluing of the currency as they cut interest rates. This is what caused the inflation in the first place back during the COVID years. They cut the interest rate down near zero. And so if they start cutting back in that direction to help the job situation out, well, then the balance shifts to maybe inflation comes back up. So there are some reasons why gold has been climbing as the major indices have been hitting all-time highs. You know, the indices like low interest rates, but people don't like inflation and tend to run to safe havens when they fear inflation. And so with rate cuts comes happy Wall Street, happy major indices, but also fear of inflation and a rush maybe to a safe haven like gold. So it's kind of the situation we've been in. Like I said, this government shutdown has kind of reversed things a little bit. We've seen the USD strengthen back against the euro, against the pound. And so maybe there's some entry points there if you think there's longer term reason with potential rate cut talks for the euro, the pound, maybe to gain back against the USD. Okay, if indeed this strengthening of the US dollar with the government shutdown fears is only temporary, which typically government shutdowns are pretty temporary. So what we could do, understanding Fed Chair Powell will speak, is go and take a look at charts that involve the USD. And so specifically, it makes sense to look at the tightest spread, the highest volume traded USD pairing out there, which typically is the Euro USD. Tends to be very stable, very predictable, and move well with news. So if we're taking a look at the Euro USD, we indeed see what I was mentioning. This pullback since the government shutdown. Why would the USD strengthen with a government shutdown? The USD tends to be a safe haven currency. So if there are fears about economic effect of the US economy maybe rolling over into the global economic system, then it makes sense that a safe haven currency might strengthen. And so down went the euro against the USD. These are 4-hour candles. This has been going on pretty much the length of time that the government shutdown has been there. Going back quite a ways here on the 4-hour candles. Okay, so we're looking a couple weeks, week and a half back, and we see the USD strengthening and pulling the euro down. So if we go to 1-day candles, we can start to see where there might be some support levels. And so what I see here are areas of support on the 1-day candles. They're not an exact line. Okay, I can pick a low side and I can pick a high side of these wicks. Okay, right about there. Okay, so we see a general area of support. Once this movement went up above, say, 115, 116 range, there was resistance here on the 1-day candles around 116.25, resistance twice, resistance 3 times. And then once we broke above there, that became support with a small break and right back up. One break below became right at that same support line, became resistance. And then once going back above became support, 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 support for weeks here on the 1-day candles. This area looking like a general area of support. And if we want a lower end to this support zone, we're looking at the bottom of this wick maybe here, these 2 wicks. So right in the area Okay, sorry, I think my audio was out for a moment there. I'm not sure how long. The mute button, my headset was hit. So let me just back up a little bit and make sure I covered everything without the mute on there. So I drew an area of support on the chart here on the 1-day candles. And we see in general between these 2 price lines, a lot of support where the price kept going back up as it reached this price zone down here. And this was the breakthrough of that price level back here, which was back in June, July. Okay, so for some time, only one break back below that then came back up and found support again. and it hasn't gone back down since. So with the fundamental news being in favor, Miranda, yeah, you're saying I'm not audible, but I'm wondering if that was an old message. If you can just type okay if you all are hearing me clearly now. If you can type okay in the chat box. Okay, just waiting on some responses to confirm. Miranda and anyone else, just type okay if you're hearing me clearly. From my side, it looks like it's all good now. There was a temporary glitch there with the mute button. Okay, great. Thank you for the confirmation. All right, so we've got our area of support, and then we're taking a look at the fundamentals. The bigger economic fundamental picture is expected rate cuts further in the US, and from the headlines and the data that's come out the last couple of weeks since the last rate cut in the US, we see many reporting increased expectation of rate cuts beyond what was already done, perhaps 2 more rate cuts before the end of the year. So there's been an increased likelihood in many people's minds that more rate cuts will come compared to what was expected just 2 weeks ago. Okay, so if you feel the fundamentals are on your side for more rate cuts tend to weaken a currency. If you understand this pullback where the USD strengthened was largely related to fears about government shutdown, and so then we're in a situation here where perhaps you trust this support level, because what broke us above that support level was the realization that likely rate cuts were coming, and indeed they started, and now we see a zone here of support. So if we take a longer term type view, we can look and say if we were going to buy on this, and indeed the rate cuts come over the next weeks and months that you expect, perhaps there's no reason in your mind why the euro couldn't come back up towards these highs that we were at not that long ago, okay? Without even having to go to this high up here, which is closer to 119 plus. We could be conservative and look at this resistance point here on the chart. So we're looking at an opportunistic entry point after a couple weeks of dropping, the euro dropping against USD, that this might be a support level you trust because of the fundamental situation with the rate expectations in the US, and a high point that doesn't even have to break these resistance levels with a nice potential return. So if we then say take profit at, let's say, 118.20 without having to break those resistance points, just going back to where it was less than 2 weeks ago. Stop loss below this support zone, so say 115.55, 115.55 would be here, okay? Below that zone of support. And there's nothing exactly magic about the exact lines I drew. You could be a little lower with your stop loss, a little higher. Same with the take profit, but I'm using the technical analysis to find spots where I think there might be trouble breaking without really strong momentum, so, and trying not to be too greedy with those exit points. Now, what I see here is a nice ratio, about 3 to 1, a little better than 3 to 1 possible profit compared to possible loss. And this is a longer term move. Okay, it's not a 10 pip stop loss and a 50 pip take profit or something. It's something bigger. So I expect it to take a little bit of time. But I also, that risk level is larger than I would want for my account. It's like a 20% or almost that risk. If I go one lot, I'm risking just over 1% of the account, a little bit larger than 1%. So this system here in the order window is what I was alluding to earlier. You should make sure you understand what you're risking with your trade and have a plan going into it. How much are you comfortable risking per trade, dollar-wise or euro-wise, pound-wise, etc., or percentage-wise, and make sure you have a number that you're going to shoot for. Maybe because this is a longer-term move, I'm comfortable with more than my typical 1%. Maybe I'm okay risking 1.5 or 2% on the trade. And that's up to each individual trader. Maybe you risk less than that per trade. So as I set this up, then maybe I say, okay, one lot is good. I could make a couple thousand profit, would be a nice return. Risking less or just a little bit over 1% to make quite a bit more. If I like the setup, then I'm ready to go. Okay, so just to walk back through this trade, it's based on macroeconomic information fundamentally. Okay, it's the U.S. situation with expected rate cuts coming, maybe an increased anticipation of it with the most recent data out of the U.S. economically on the economic calendar being kind of worse than expected. And now Jerome Powell speaks later today, who is the guy that really makes the final decision on these rate cuts. So there could be momentum created here, potentially, depending what he says. But I already know what the data was. It was poor. So if he's going to stick to his word and be data-driven, then perhaps there's some impetus put back on expectations of strong rate cuts moving forward this year in the U.S. We'll see, but trying to read the tea leaves and then use the technicals to find an opportunistic entry point, which this certainly is if it's going to bounce up this support level. Okay. Now, taking a look at some other ideas, if we go back to the economic calendar, besides Jerome Powell speaking today, which is here, we can take a look. There aren't a lot of announcements today, and you see there are a lot of Fed speakers today. Okay, the Fed chair, Jerome Powell, but then other members, Bowman, Barr, Bowman again. They're going to be talking a lot about what they think about monetary policy. And so this really could, and since they all just voted to cut interest rates, we kind of understand the way that they've shifted their thinking with the last meeting. So if they stay in that direction, maybe that's a good setup that we just simulated with that Euro USD. Okay. Then we look at tomorrow. There's some nice data points coming out that you could trade on. So PPI out of Japan, big focus lately. And if we take a look, if you haven't used these tools that give you a lot of information, quick, easy to use, okay, come over here to the side. Most economic calendars don't have these tools, so I'm choosing the volatility tool, and you can pick any currency pairing you want. In this case, we'll leave it on USD JPY, and when I say you can pick any pairing you want, in this case involving the JPY, it has all the JPY pairings because it's an announcement out of Japan. You can pick different time frames after the past announcements that you want to analyze. I'll leave it on 4 hours. And you can qualify how the past announcements came in and see how did the market move with those announcements. So in the past, when the PPI data came out, and this is the year-over-year PPI data, it's inflationary data, purchasing price index. So if we look at how many times it came in above forecast, higher than expected, it was 5 times, and 60% of the time the yen strengthened when that happened. Okay, so higher than expected demand basically, and the yen strengthened, pulled the USD down the majority of the time. 3 times down, 2 times up. It's not a huge majority, but it's a majority. And the ones that went down on average look larger than the ones that went up. You see how much it dropped on this one and this one. Neither of these were even close to the size of the drop here. So looks like you could have short stop losses and a longer take profit if indeed this comes in above forecast, and you'd just be looking for an entry point in the first 5 minutes. Okay, you can look, how did it move in the first 5 minutes? A lot less. Average range movement, 4 pips. Okay, and after 4 hours, average range movement, 53 pips. Okay, and then what if it comes in below forecast? What happened in the past? 100% of the time, the opposite. Okay, that's a little better statistics. 100% of the time, 4 out of 4, the USD strengthened against the yen, or the yen weakened against the USD. is maybe better said, because it's a Japanese announcement. The yen was responding to that announcement and weakened, and so the USD went up all 4 times that this data came in below forecast. Average range movement, not huge, but almost 35 pips after 4 hours. In the first 5 minutes, average range movement, 6 pips. One of them was actually down. And by the way, it doesn't take 5 minutes to place a trade. So I'm saying in the first 5 minutes, this was the movement. You could place a trade in the first 5 seconds or 30 seconds if you see an entry point you like, understanding that in the past, after 4 hours, it was up 100% of the time when this data comes in below forecast. So if you're watching this announcement, comes in below forecast, and you see an initial spike down on the USD JPY, perhaps you want to buy on that if you're trading on what we call data-driven trading. The data being what we're looking at here, telling you that maybe you have a better chance that this will go up after 4 hours rather than down based on the past times it's come in below forecast. Okay? Just you don't guarantee you'll win every trade, right? Or what percent of the time you'll win. But if you try this strategy on different announcements, whether it's CPI data out of the EU or PPI data out of the US or production numbers or unemployment figures that are on the economic calendar, try the ones that you see the best statistics, like we're looking at here, we're analyzing in advance, and the ones that you feel strongest about being an easy relationship to predict, mark those off on your calendar for the upcoming week and watch those come in and try and work out your trading plan based on this data. You have an idea of how long to let the trade run, how far on average you might expect it to go for a take profit, when you might get out, etc. So you can act pretty robotically based off of the fundamental news data from the past, comparing it to how does it come in this time. And there are a lot of announcements that show strong numbers that look very predictable. Okay, unemployment change out of Canada. These tend to move pretty well also. So if we look at the USD Canadian pairing, 4 hours after this event, unemployment change, if it comes in above forecast, okay, 50-50. That doesn't convince me. What if it has come in below forecast? Now that's stronger. So if the data was bad, meaning higher than expected unemployment in Canada, it was a mixed movement. You really didn't see a statistical advantage. However, if the data came in good news, lower than expected unemployment, or I'm sorry, it's not unemployment, employment. So when it was good news, higher than expected, is employment data, not unemployment. So when it was good news, higher than expected employment, 3 went up and 3 went down. Now, there was a larger upward movement here than down, but 50-50 in terms of direction. And when it came in bad news, now we have it straight, bad news, below forecast, which means lower than expected employment, the USD strengthened across the board 100% of the time. And that makes sense in your mind, right? Employment out of Canada, worse than expected, lower than expected, the Canadian dollar weakened. And it didn't just weaken 55% of the time or 80% of the time. On the past 1, 2, 3, 4, 5, 6 times that it came in worse than expected, the Canadian dollar weakened 100% of the time, 6 out of 6. And average range movement, 54 pips. And you might look and say, well, in the first 5 minutes, would I have a chance to trade? The movement was only 17 pip range movement on average. And again, it doesn't take 5 minutes to place a trade, so you might even get a better entry than that. Understanding that after 4 hours or after 1 hour, the movements were all up. There's 1 hour average range movement, 34 pips. 4 hours average range movement, 54 pips. So it continued to go further, from 1 hour to 4 hours even. So this looks like a strong one also to potentially trade, and I would be selective. Based on this data, I'm only interested if it comes in below forecast, lower than the expected number, meaning bad news for the employment change. Okay? The other way, I'm not convinced. 50-50. Any questions, comments on the use of this economic calendar? I'll pause for a moment. Okay, and if I see any questions pop up, I'll address them as I see them. Now, we can go back to the trade area. And another place we can look for fundamental news. So we've covered a couple strategy concepts. One is the macroeconomic data or news, like the big headlines. And the biggest one I can see right now is about the interest rates. And Jerome Powell speaking today, followed by other FOMC members speaking today. So that's the big macroeconomic story that I think could carry a movement like Euro USD for a longer term type move. So we looked at a longer term, mid-term to long-term type move, not a one-day trade necessarily, but maybe something that could carry on for a week or two or three before either hitting a take profit or stop loss. So the larger headline type news, maybe we're looking at a little bit longer move. And so we simulated that. Then we look at trades that are more right now type trades. The data came in on the economic calendar. You make your trade based on the past data, and you're looking to get out in the examples I showed within a 4-hour window for a certain distance profit that's been shown in the past in that time frame. So we went from a longer term type strategy to diversifying to a shorter term type strategy. And so the point here is there are different ways to trade fundamental news, and it might make sense to diversify, like I'm giving examples here. So you're not putting everything in one idea, and you have a chance to go after profits in more than one way. Now, if we also then look for a third fundamental type strategy, we can look at the market buzz. And what's nice is you don't have to leave our app or our platform to use all of this information. And so if we look at something like AMD, boy, that hasn't been in the news a lot. Usually we see NVIDIA, Tesla, Microsoft are the big names up here. And all of a sudden AMD is one of the biggest circles in the pictogram. Almost 1,500 mentions online. So maybe we click on that and we try to see, well, why is AMD, Advanced Micro Devices, trending so much? Wow, that's quite a prediction. Price may rise over 20%, it says. So I click on that. I want to see the technicals. You've got a technical breakdown. If you're into looking at the indicators and the support resistance levels, they're here for you. And you see the predicted price movement up to about, looks like 144 if my eyes aren't failing me, to the take profit zone. 144 is the expected move and a continued 20% climb. Okay. The question is why? What's the fundamental news behind that? We understand, okay, rate cuts, that's a general effect on the larger stock markets. But what specifically about AMD would give an expectation of an upcoming 20% price rise? And so what we can do is start to read this column, the news feed, which is dedicated to this stock, to try and find information that's related to it. Okay, here Advanced Micro Devices hits all-time high as AI optimism soars. So they're a key player in AI. All right. Yes, so Alphonse, you're asking, some medium impact news causes a huge change as if they are high impact. When we were on the economic calendar, Alphonse is referring to the fact that you can tell the calendar that you want to look at high impact, medium impact, and low impact announcements, and they're marked high, medium, low. Or you can tell it I only want to look at high impact, or I want to look at high and medium, which is how I had it set. In the filter on the economic calendar, I set it to look at high and medium impact. It isn't always the case that high impact announcements have the largest movements and medium impact will be smaller. It also depends on what's happening macroeconomically, where's the focus Is there more of a focus on certain data than others? And sometimes a medium level announcement, depending also how far away from the expected numbers it is, can have a larger effect than some of the high impact announcements. So it's a very good question. It's not a set rule that the high impact will always move larger and the medium impact won't. Some medium impact announcements can cause really big movements, and it depends on what's the volatility like in the market at the time, what exactly was the data regarding. Right now, there's a big focus on jobs data and inflationary data. So even if it's medium impact, if it's far from the expected, it could create still very large movements. Very good question. Okay, now back to the market buzz feature here. And advanced micro devices hits all-time high. Why? AI optimism. You can read, well, what's that have to do with micro devices? So I can click and read the whole article. All right, and if you read, you'll see that advanced micro devices just had a new deal with OpenAI. They're going to be a chip provider for OpenAI. They have some kind of deal or contract that they're working out. And so as we scroll down, you can get more information on that. So here are 10 big names to watch with explosive growth. Okay, another article. And again, you would read the article. I'm just scrolling through them. But read the article, and you see the first one listed, advanced micro devices, expecting explosive growth. You can read the article and see, well, why? Why are they listing advanced micro devices? Now you start to build a basis fundamentally as to, do I trust this technical signal? Okay, so a lot of times I have clients ask me, how do I know which signals to trust, or why do I not have great results when I follow the signals? I seem to lose as much as I win. And my answer is, you should try to combine the fundamental news first, have an idea of what you believe in based on the actual real news, then look and see what the signals are, and trade on the signals that align with the fundamental news. And then you can make use of these technicals that have been done for you for price points, entry points, exit points, etc. And so we already saw a couple articles here that look positive for AMD. And as you scroll down, I think you'll see more. Here's the one about the partnership with OpenAI. AMD and OpenAI, a partnership that just redrew the AI map. Basically, they're the first major competitor now for NVIDIA. It was all NVIDIA, and here's another one. AMD deal with OpenAI gives NVIDIA a needed challenger. So that's a big deal. If they're challenging NVIDIA now as a chip provider for someone like OpenAI, so you can start to read the articles and really make up your mind as to whether you are interested in this signal. Sounds like really solid news. So let's check the price point then for advanced micro devices. So if the signal says, what was it, 144 is their suggested take profit, which is all-time highs. So they're just picking a number, it looks like. There's no resistance level up there. So if we look for AMD then, let's pull up the chart if we can. Oops, we want to be in the trade area. Advanced micro devices, here we are. We have the chart. And what we see is a huge climb already for AMD. Let's go to maybe 4-hour candles. Okay, here's yesterday's gap. Okay, 1, 2, 3, 4, 5, 6 candles times 24. Okay, we're looking at 24 hours of trading, which actually is a couple days here. This is going into this week. So this was a gap from last Friday price to the opening this week. And obviously the fundamental news leaked out and was understood by the market, and there's a huge climb. So you have to ask yourself, that 20% climb that's listed in that signal, did it already occur? And I'm looking at a price down here on 165, and now we're at 235. So we went up $75 per share on AMD just from last week to now. It's $75 per share. It's way more than 20%. So this was a huge climb. So the question is there an expected additional 20% climb? Because the climb was really large here, 40, 50% climb. Okay, 40% anyways, 35% already climb and up. And so that line in that signal said was around 140 or 244. Okay, so we're looking right about here was the take profit suggestion. So we're still have another $9 to climb to where they're saying to take profit. But indeed, it looks a bit late, to say the least, when you start to look at the larger chart and see what already happened. This might actually be primed for a pullback. Not that it can't keep climbing, especially if Jerome Powell talks about rate cuts today. The positive momentum could easily carry to that take profit zone, but we're pretty close to it if you look at the bigger picture. You see the climb, but you see the power of the fundamental news. If you saw that news earlier this week, even after the gap up, you could have bought, and you'd have gotten in around 210, and you'd have already gained $25 per share, even after the news and after the gap. Okay, so we see it gapped up, and there's a little pullback, but up it went with the news because it's really big news. So maybe a strategy with AMD is when the US market opens, see if there's a pullback. Maybe you don't like getting in at this price so close to that take profit suggestion in that signal. So maybe you wait and see, maybe it gaps down. Maybe it opens down this direction and you say, okay, this will be my support. The top of this gap would be my support level. And so my stop loss would be down here if I enter, but maybe you're hoping to get in closer to that range and then have your take profit towards this take profit zone up here. So maybe a pending order might make sense when the market opens, to have a pending order down near the price point that you like with a take profit then up towards the take profit zone in that signal. Because it is really good news for AMD, but maybe the price point isn't your favorite unless you're a longer term trader. Then okay, the price point, maybe you don't squabble over $5 or $10 per share, because if you're going to hold it for 5 months or something, you expect it to go maybe to $300 per share or something. I don't know. But at least this is an example of the power of the fundamental news. Now the strategy is, when would you get in if you didn't already do that at the opening of the market Monday, let's say, after this gap up. Okay, I think this is a good place to stop. We've gone over a few strategy concepts. Any questions, comments before we end the session? I'll pause for a moment. And actually, what I'll do is I'll go back and show you from the question earlier, just to make sure you see it. Here's the filter, and I can tell it to do only high level announcements, or I can do medium and high. I can include the low ones as well. So you see all three are checked. So now the low level are listed, and the high level, they're marked here, medium, high, low. That's the importance that they are deemed to have on the markets, okay, on the movements of the currency pairings. And so I tend to leave the low level off, but like was already said, the medium ones sometimes will cause big movements. So I'll leave the medium and the high ones on as I'm looking at what's coming up. Okay. All right, everybody. I don't see any new questions popping up, so this will be a good place to stop. Thank you for joining. Good luck with your trading. I do expect some pretty big movements as Jerome Powell starts speaking and thereafter. So, get your risk management down, get your instruments lined up that maybe you think you could trade on. Maybe you look at the economic calendar as well going into tomorrow. And I wish you good luck with any trades that you make. Until next time, wishing you great profits. Bye for now.